Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here. And to all our Jewish friends or non-Jewish friends, it's Happy Hanukkah to all of you, which begins today, which is very appropriate because, in the ancient times, we had what was known as the Maccabees, a group of aggressive, militant Jewish soldiers that were able to, extricate themselves from the tyranny that existed at that time. And I forget the exact king, whether it was a Persian king or whoever the tyranny was at the time that was attacking Israel. And so I always joke about how Jews in general should wear the hats of the Maccabees to defend themselves, particularly with the anti-Semitism on the planet today. But, for years, even before this event that's engulfing Israel now, always had the view that we have to think of ourselves in the Maccabee role and be defensive, not sheep waiting, ready to be slaughtered. So, story of the Maccabees, you may want to read about it. It's a long story, involving a candle at a certain time. That this is a story of Hanukkah that didn't go out, the fire didn't go out, and miraculously it stayed for 8 days, and we attribute the Hanukkah holiday to the miracle that occurred at that time. So again, Happy Hanukkah to all those who participate and light those candles for the next 8 days.
December 7th, 1941, a day that will live in infamy, Pearl Harbor Day. And I guess that's a reminder of the price of not being vigilant.
Right. I put that in my newsletter today, in fact, right at the top, a little visual. And I really, unless I missed something, I didn't hear much discussion about it in the financial press at all in terms of today being December 7th. We seem to remember, of course, 9/11, and that'll go on for a period of time. But at some point, they'll stop talking about that as well. Maybe it'll take 50 years. But, outlier events, and that's certainly one of them, December 7th, 41, though there are stories that many knew it was coming, and it wasn't the big surprise that we thought it was, just like we're hearing now in Israel, that the attack by Hamas wasn't such a big surprise. There were those that had known about it, that there's a bit of a cover-up discussion going on right now. So, you'll hear all kinds of stories about where the truth really lies, but we know back in 1941, the Japanese were pretty pissed off because apparently we had an embargo on oil, and we weren't so friendly to Japan at the time, and there were some rumors and research or inside information that an attack could come, and so things just don't come out of thin air. And though we occasionally refer to these as outlier events, and more, I'm sure, are headed our way over time, but it's interesting times. Meanwhile, you listen to the financial press and you listen to the news of the day, and, the discussion is presidential election coming up, the Republican debate that just occurred, and the big story, of course, every day is the Fed lowering rates or not lowering rates, and very little discussion about other events around the world that, could affect the markets. It seems like our entire existence, and I'm a bit of a cynic here, I've been doing this for 44 years, our entire existence now depends on whether the Federal Reserve starts to reduce rates next year, which is the most ridiculous assumption you can make. I mean, look at all the outlier events we've had in the last several years. You don't have to go back too far. COVID, I guess, being the most recent big one. But, the Fed has little or nothing to do with what happens to our economy. In fact, they're probably just pawns in a bigger game. And we see right now, for example, the Treasury bonds have been upticking here the last couple of weeks. And who's in there buying the bonds and driving the prices up? And they say, well, is it the free market that anticipates rates are going to come down? Are they the tail that wags the dog being the Federal Reserve? Is it just manipulation on the part of the plunge protection team or other government or non-government entities trying to manipulate the markets and perhaps even sending false signals about what really could be coming? But our entire existence is not based on the Fed or what rates are doing. And you just, a little unnerving as a trader, having done this for so many years. You see things in the charts, when things are overbought or oversold, overdone, and the charts sort of tell you what's happening. And they were saying, we got overdone here on the interest rate side. But I think we're going to have a lot of surprises in 2024, Jim. I think, focusing on the Fed is a mostly narrow view, in my opinion.
Well, the Fed controls short-term rates, but not long-term rates. And that's what the bond market trades on, right?
Correct. Yeah. And, of course, they control a lot of other things, too. We have the money supply, what they're doing there. They tighten credit. They really haven't done very little there at all. If they follow the pattern of Paul Volcker, you would have seen, a real market crash recently versus a little bit of a pullback. Volcker not only drove rates up to nearly 20% in 1980, but pulled back credit. So, you really couldn't borrow money. And rates are up along with, that's the reasons rates skyrocketed so much, because they pulled back the money supply. Powell didn't do that this time. I guess for political reasons. We have an election coming up in this next year. My whole view is you abolish the Fed. We don't need it. It's caused more destruction than benefit. The free market should determine rates. We're starting to see that right now, as you just mentioned, with longer rates being controlled by the bond market, and that's what influences mortgages and long-term financing, which is really the key, particularly in the real estate sphere, where a lot of companies are locked into, very low rates and now have to refinance, which are jeopardizing the existence of, many office complexes and companies related to the real estate, commercial real estate in particular industry. In fact, I just attended 2 conferences here in Phoenix the past 30 days. One was on multifamily housing and one by single-family investments. And in both events, I was asked to be a moderator of panels about what was coming and what was not coming. Of course, we have a bit of prejudice here in Arizona, since this has been a tremendously profitable real estate environment for Canadians and others who participated in the growth in this particular state. But general view is things are still tight, and there could be another leg down here, and it could surprise a lot of people in terms of have we really seen the turnaround or not. If you listen to financial TV, they're thinking, well, mortgages, which were as high as 8%, might get down to 5 or 6 perhaps next year. But we'll see. A lot of things are based on politics, outlier events that could occur that we're not even thinking or talking about. And, of course, we have to see what's happening with the economy. We just know a lot of people were sort of semi-supported by the COVID grants. We hear and read that investors, citizens, consumers have been dipping into some savings to make things happen, and particularly with Christmas coming up, not wanting to deprive their friends and relatives of gifts. But things aren't as good on the home front as the stock market seems to be telling us. So Santa Claus is coming. We'll see what happens between now and January 1st. Should be interesting.
The GDP number that was released for the third quarter was tremendous, But why would you have such a high number when the average person will tell you, look, I don't have any money. I can't spend extra for Christmas?
Well, I come from the view, again, this is not something you hear or read on financial television or read in the papers. I don't believe that the numbers are true. I think they're manipulated, just like markets are manipulated. I'm not a conspiracist. I was a floor trader. I saw manipulation in action on the floor. I know what it looks like, and I know when it happens. You have a sixth sense for it in most instances. News is known ahead of time by insiders. They act upon it accordingly. Government manipulates numbers for political reasons. I only believe numbers that are generated by the industry itself, industry numbers. So let's say the National Association of Realtors comes out with their own studies about real estate sales and mortgage applications and closings and on and on. I'm more likely to believe that than if it was a government report, because government reports, I always joke that the BLS, the Bureau of Labor Statistics should be known as the Bureau of Lying Statistics. So I don't believe any of the government reports anyway. So I don't know if that GPT number was real, whether it'll be revised in a subsequent report. So it's sort of irrelevant. You got to watch the tape. Seasonally, the market was supposed to go up the end of the year. And it's funny how the bond market starts to rally, which brings rates down just before that happens. There are no surprises here. So the question is, when does it end? Does it continue into next year? I don't think it will continue immediately. I think once we come into January, I think some profit-taking may ensue. The first quarter may be choppy, if not down, in my opinion, and then we'll see what happens on the political front. But to answer your question, the GDP numbers, I don't look at any of these things. Everyone holds their breath for a economic report, and the market reacts or doesn't react, but it's all manipulated stuff. So you got to just, I don't know how an individual investor survives. If you trade and you're in and out, we had a couple good days here trading some stocks. I could care less because I'm not an investor. It's VR trader.
Mark, is there a bit of a disclaimer you want to give before we continue?
Oh, yes. We did mention I'm not a financial advisor, nor do I provide financial advice. We do produce the financial newsletter and have for good, God knows now, 44 years. So just want to let everybody know that we don't manage money or make investment decisions for individuals.
Now, some people might call this shrinkflation. I call it downright fraud. People are now finding a package, say, claims that it has 200 grams of whatever in it. You weigh it, there's 100. And so the package itself is lying to you. They're putting the wrong number on it. I'm sure the grocery store chain will claim, well, that must have been a manufacturing error that they didn't put more potato chips in. But when you find it across all of their stores, is this a deliberate thing? Potato chips. Yeah.
Potato chips.
Yeah.
Really?
House brand potato chips at Loblaws. But other things, cereal, you're getting half of what they claim. Now, they always put a disclaimer on the saying this is sold by weight, not by volume. So if it seems like there's less, it's just because it's settled down on the package. But now the actual weight is not what they say it is.
Doesn't surprise me. I've heard this is not a new story. I mean, I don't recollect an instance recently, but over the years, this has come up several times about packaging and labeling and what's really in the ingredients and what's in the packaging in terms of content and weight. So no surprise to me, Jim. That's capitalism at work. Right.
Well, people always wonder, where did the baker's dozen 13 buns come from? Well, it's because they found people back in medieval times were not getting as much bread as they were being charged for. So, and the penalty for shortchanging your customers was like everything else back then. You swung from a rope. So bakers, to make sure that they weren't shortchanging, added an extra bun. So if government inspectors weighed the bread, they would find that they weren't shortchanging. I'm not saying that these crooked grocery sellers should be hanged, but there should be some kind of serious penalty other than a fine that is a mere fraction of their record profits. Otherwise, they're just going to keep abusing consumers. They get away with it every time.
Well, then you get into the whole discussion of planned obsolescence. You know, how long do products really last?
Oh, yeah.
And so again, how much of this is intentional? It seems like a lot is versus unintentional, or is it just the ability of companies to produce consistently good products and have the technical wherewithal and the materials to accomplish it? So, lot to talk about there, but I appreciate you bringing it up.
Yeah, and years ago, a guy sued Budweiser because he had his can of beer tested and it was 4.95% alcohol, not the 5% it said on the label. And if they were doing that to every item of Budweiser they were selling, it would save the company literally billions of dollars a year.
Wow.
And again,
not much of a beer drinker.
Yeah, well, me neither, but I totally sympathize if they say they're giving you so much and charging you that, and you're paying tax on that supposed alcohol as well. Maybe that's why governments don't care, because they get sales tax on it, because it's junk food.
Sounds certainly plausible to me. What about Mayor Bloomberg of New York in recent years, the former mayor, two mayors back, trying to discourage sodas because of the sugar content and so forth too. So
yeah, there's a soda tax in BC, even if you're buying sparkling water. Or they put tax on bottled water. So where's the sugar in that?
Right. So they're not doing it for supposed health reasons the way Mayor Bloomberg was doing it. Listen, I sort of agree with him. It's bad for you.
Yeah, it is.
Soda, but is it the government's role to tell you what to do? Whether you're going to be sober or drunk or sugared up or not sugared up, or whether you should smoke, whether it's tobacco or marijuana or whatever. It's individual choice. It's with some guidelines, of course, but.
Well, New Zealand was trying to up the smoking age every year to try to finally snuff out smoking, and the new government says we can't afford to lose the tobacco tax revenue. So puff away, New Zealand, puff away.
Well, this is one of the reasons why cannabis became so, I won't say so successful, but reasonably successful among the doubting Thomases. It's just like when they initiated the lottery decades ago, it was viewed on as being, something inappropriate, but the states began to realize, gee, we could make a lot of money, legalizing a lottery in the state, and it spread nationally and in Canada and all over. So governments make money. Same thing with marijuana. Colorado set the standard when they became the first state to legalize it, and all the stories came out about how much revenue the governments are receiving from the sales, and that caught on. Yeah, has to do with government, government revenue more than the validity or legality or the health benefits of what you're doing.
Well, the government controls marijuana sales in Canada, and yet marijuana producers are losing money. And the line for that is, only the government could lose money selling drugs.
Well, I know the cannabis companies here in the U.S., Canadian ones, fell flat on their face. The big name, of course, was weed, which became Canopy Growth, which was the darling of the Canadian markets when it went public at $1 a share back, I think it was in 2014, and went up to almost $60 a share, and now it's trading, I think, at 60 cents and nearly bankrupt, and a lot of mismanagement there. Of course, a lot of it was dependent on the legalization here in the U.S., which has still been stalled. And it's not just the reclassifying marijuana from Schedule 1 to 3. It's that Banking Act issue here where you can't really transact with credit cards or banks as free as you can in Canada where it's legalized. So a lot of shenanigans related to, you think the government would just fix that. More money for the government, but it's not happening as quickly here in the U.S. as it did in Canada.
Well, Colorado, I guess, did roll out marijuana, right? because apparently the state has more money than they know what to do with from it.
It's been a really a big benefit to the citizens of the state. That all kinds of schools and roads and all kinds of fun stuff has been benefited by the revenues. So listen, I'm not against marijuana. I know a lot of people here, particularly in the Sun City, the elderly crowd, and I guess I'm getting close to that now as I'm in my mid-70s, but here in, Sun City, here in retirement communities, cannabis is big. CBD is big, cannabis is big, a lot of health benefits related to that have been claimed. A lot of it is anecdotal, but big business here. So more power to those who use it, who find the benefit.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's going on with gold right now?
Oh, we had an interesting event this past week. We had a blow-off. It was actually during the off trading hours and weekend or overnight trading where those were waiting for that, myself included, that triple top to finally come out at that 2070, 2080 area. Of course, I'm referring to gold price in U.S. dollars. And it shot up to 2157, I think was the number, and then just immediately collapsed from there, from 2157 all the way back down toward the 2000 level. So it was, a big key reversal. It just was like an emotional explosion of some kind. What triggered that, whether it was manipulated. I mean, of course, I know the gold market's manipulated. It's been going on for decades, but that's not a news story. But why it happened that particular moment and suddenly reversed as it did. Of course, we know the strength in gold was inhibited a bit, as the U.S. dollar, had been going up. But in the last 3 weeks, the dollar's been giving up some ground. So that, I guess, gave the ammunition for gold to sort of take off. But it's been frustrating. If you're in the gold market and you had the coin, you had the money, you probably couldn't sell it, even if you want to sell it at 2150. Of course, there's usually a 5% spread, on the buy and sell side in the physical gold market. If you deal with dealers and so forth, if you're in the futures market, you can, I suppose, if you were trading and online in overnight hours, you might have been able to get a nice price for your gold. But most gold players are not trading the futures; they're in the physical market, or they're in the shares, which have been lagging considerably for the longest time. And we know, because we had had for a good part of this year, a lot of shares of gold stocks and silver stocks in our portfolio, and gold's going up and these shares are not participating. And, their cost of production, labor costs, all kinds of issues. I know Newmont Mining had a big issue with some strike somewhere in South America, and the companies, are having difficulty, I guess, making money because their shares are not participating. And usually, in years past, you would see shares lead the metal up, and that, with rare instances, there were a couple of exceptions. It did not happen this time. So, to answer your question, I don't know what's happening right now with gold. I mean, it's the same story. You trade it. If you're a big bull and think currencies are going to zero and the Bitcoin is going to take your cash, the digital coin is going to come in, not the Bitcoin, but digital coin, and your money is not safe in the banks, and you want to own gold, and there's a good reason to hold it, and history is on that side, though it is not appreciated because of government intervention, unfortunately. But it had a big reversal there this past week, so now it's sort of building a base here in the low 2000s area. We'll see if we can regroup here and attack the highs again at some point. My own forecast model that I put out for the year, I was asked this on other radio shows and interviews, one notable one in Canada. Was I bullish on gold? And I said my model said pretty much up all year, but come November or so, it looks like you might be approaching some type of cyclical top. And though it happened apparently the first week of December instead, we might have seen a little bit of a high here for a while. So You keep your foot in the door. If you own a little bit of it, no big deal. And I'm not jumping on it real big right now. I think if it can go back above that 2157 high and stick, then you can start talking about the 2300 and all these numbers up to 3000 and so forth. But if I had to make a living trading gold or holding gold to make a living, I should say I would have been out of business a long time ago, because it fits and starts, goes up $300, comes back $300, and yes, since 2020, you had a huge move, from $200-300 an ounce up to $1,900, $2,000, and that was a nice 20-year play. But I can't pay bills on 20-year moves. We try to make moves on shorter-term movements, like what's happening in Bitcoin right now, as you saw these past couple of weeks, where Bitcoin exploded to nearly 50,000 a coin. Where just a year ago at 15,000, they thought it was going to go to zero. So there are some things that are providing a little more action for me.
What's happening with crude?
It's approaching a cyclical low, in my opinion. It had a big run up, topped out, and the market cycles, the technical patterns are just telling me that we had a bit of a top, but usually by mid-December we should be bottoming out here. So I'm overall bullish. Around $62 is probably a good support level, and we'll see if it gets that low. And I'm waiting for some reversal signal on the charts, and then I'm thinking it could take off again. The only factor that worries me, it's more of a political comment than a fundamental or technical comment, is if there's a change in leadership here in the U.S. and we have, whether it's Donald Trump or a surrogate come back in that is pro-energy and pro-production, and that happens within the next year, then that could be suppress the price of crude, because then production would go up. We wouldn't be holding our breath what OPEC is doing or not doing, and we become energy independent here in North America. So if that happens, and that's you'll be a year out, but before we know that, that could hurt crude oil. So we'll see.
What's going on with Bitcoin? It seems to just keep rising and rising.
Yeah, well, we had a little dip here. As a trader, I took for our clients, I recommended they maybe take a little trade here because it had run up so fast. And, the vehicle that, we look at, the current trading vehicle, because I don't really trade the coin itself. You can do that with the various platforms like Coinbase and Uphold, and you can search for those on your phone, all these platforms that you can trade the coins. But the vehicle is that GBTC, which is the Bitcoin Trust, which I believe is going to become an ETF itself. And then, of course, we have the Larry Fink BlackRock ETF coming at some point, which is the reason why Bitcoin went up, because anticipation of the ETF. We talked about this a few times already. So it's like anything else, it trades. It goes up, it goes down, but it's in the high 30s. It was as low as 8 per share. That's the GBTC. And then Bitcoin itself. I mean, there's some predictions out there which are crazy. I'm hearing, predictions $1 million a coin. I mean, the highest it got was over 60,000. I was thinking maybe 88, 90,000 in the next couple of years was possible. It depends. You get enough ETFs trading up there, and institutions and money managers decide, well, you have to have an allocation in Bitcoin, just like you need an allocation in real estate or gold or any other portfolio allocation. There's a lot of money out there, and a certain small allocation to an ETF could drive Bitcoin to astronomical levels, because if you go in and you buy the ETF for Bitcoin, the money managers that run it have to go out and buy the coin to fulfill the order. And if enough emotionalism and pandemonium unfolds around this, I mean, who knows how high is high? So when the World Gold Council created or was behind the formation of the gold ETF GLD years ago, that was, even though gold's been suppressed and it's manipulated on and on and on, we have a lot of documentation about that. Net, it did create a lot of buying interest in gold by creating that ETF, and gold, partially advanced because of the creation of that ETF. So we can't discount it. You've got to have an allocation in the Bitcoin ETF. Absolutely. I mean, I don't know if it's 1/10 of 1% of your money or 100th of 1%, whatever allocation you have. I mean, if you allocate a portfolio and you want to be diversified, there's no question that Bitcoin's going higher. And the question is, will it drop, 5 or 10,000 on the coin and 5 or 10 points on the ETF before it goes up again? This is just normal market fluctuations. But, who knows how high is high? So particularly with uncertainty regarding currencies and government debt. And this is why I think, BlackRock and Larry Fink, Virginia, by the way, as you may or may not know, they're the largest money manager on the planet. I don't have the number, but they manage trillions or $8 trillion or more dollars. So it's a self-fulfilling prophecy. It's just something you got to be in, and I guess you dollar cost average. You say I'll buy $100 worth of it every month, whether it's up or down, or $50 or $10, and just put it away because I think the writing is on the wall here.
Mark, thank you so much for chatting with us.
Love it. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark, you can send them to info@housestreet.com. Find us on X @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.